On Monday, June 15th, Dalal Street erupted. The Nifty 50 and Sensex benchmarks snapped a 2-week losing streak, gaining nearly 1% and 2% respectively. Investors added 8 lakh crore rupees to their collective wealth in hours of trading. This visualization maps out a core rule of economics. High inflation usually crushes a bull market. When costs for materials skyrocket, central banks raise rates, corporate margins shrink, and stock prices fall. But on that exact same day, the government announced India's Wholesale Price Index, measuring domestic producer costs, hit a multi-year high of 9.68%. Why would Dalal Street bid up asset prices by 8 lakh crore rupees on a day when domestic inflation data is flashing bright red? The answer starts with how we measure that 9.68% figure. The Ministry of Commerce and Industry just released this data under a revamped Wholesale Price Index, featuring an updated base year of 2022 to 2023. This new basket tracks 957 items, up from 697, to monitor modern energy prices. Because it's so sensitive to energy, it captured the 107-day Middle East conflict's lag effect. Fuel and power prices spiked 30.33%, driving the headline print. This 9.68% figure is historical data. It functions as a high-definition photograph of the financial damage caused by a war that has already concluded. The catalyst for the rally occurred in Switzerland. The United States and Iran finalized a peace agreement to end 107 days of active hostilities. A central condition of the treaty was the immediate reopening of the strategically vital Strait of Hormuz. With the supply bottleneck removed, Brent crude prices collapsed by over 4%, sliding below $83.50. India imports over 80% of its crude. When the global price falls, the national import bill drops in tandem. A lower import bill relieves pressure on India's current account deficit. That shift strengthened the domestic currency, pushing the Indian Rupee to a 5-week high of 94.60 against the US dollar. The peace treaty triggered an economic chain reaction. Lower fuel costs slash corporate logistics expenses, expand profit margins, and erase the supply bottlenecks that caused the May inflation spike. This chain of events explains the contradiction between a soaring market and a 9.68% inflation print. Economic data reports on what has happened, compiling the receipts of the past. Stock indices, however, price in what investors expect to happen tomorrow. The India VIX, a gauge of market fear, dropped by over 3% on Monday. This shows anxiety regarding future inflation is evaporating. The energy bubble has popped. Traders know the high costs driving the May WPI data are now the ghosts of a resolved crisis. The US-Iran peace deal redirected India's macroeconomic trajectory. The market will always place more value on the certainty of a peaceful tomorrow than on the lagging data of a turbulent yesterday.